Good morning, everyone. Welcome to this Friday morning pre-market rundown here at TriggerCharts. I'm your host here, Kevin Hoffman. I'm one of the co-founders of the TriggerCharts indicators. Before we get started, let's read through the important disclosures. And if you could just post in the chat if you guys can hear me okay, if you can see the screen all right, and we'll move forward here. Investing involves substantial risk. Past performance is not a guarantee of future results, and loss of original capital may occur. Please consider this for educational use only, and as always, use your best judgment when investing. Well, coming into a nice Memorial Day weekend, hopefully those of you whose states are open will have the ability to get out and enjoy the nice weather. If it's nice in your state, I know down here in Florida, the weather is starting to turn very hot and humid, but at least we have some sun out, so it should be a very good Memorial weekend. Get out there and barbecue some meat or smoke some meat or whatever you like to do for this holiday weekend. Moving on to what we'll be discussing, we're going to be taking a look at some of the measures that the U.S. government is doing to retaliate against China, whether this is for their responsibility in the virus, or if this will be, pushing them to do something with trade. We'll also take a look at the Federal Reserve, some coronavirus cases across America and abroad, taking a look at what states maybe are still on the rise, which countries are still on the rise. We're starting to see some newcomers into the foray here, especially in Russia, India, and some of the South American countries. We'll take a look at some of the index levels, just to see kind of where we stand, and then we'll look at economic data for this week and next week. As always, feel free to put some of the stocks that you'd like us to take a look at in the chat. See that we already have a few people writing in on a few positions, so we'll take a look at those toward the end of our talk here. Before we get into things, let's take a look at the E-mini S&P futures. This is a daily chart here on the right. You'll see we're starting to do a little bit of a consolidation area here. It's a wide range, but it's between 2750 or so all the way up to 2950, 3000. I think there's going to be quite a bit of a battle here in this 2900 to say 3100 range as we establish quite a bit of volume previously on that drop. If you look back here in this section here, we'll draw a little box here before we put on the radar, but you'll see it more clearly when we put the radar on how much volume is in this area. Studies. So you can see you have this big high volume node here at this 2970, and then quite a bit of volume all the way up to 3100. So it's going to be quite a bit of a battle, I think, going on here between the different players, whether we continue up past that 3000 to 3100 level, or if we move back down toward that 2750 level. Right now, I think we're going to be in a consolidation type pattern. Overnight, we saw markets. Let's remove the radar so we get rid of some of this stuff. Overnight, we saw markets drop down quite a bit, down to the 2900 level and retest down below to that 2900, but pop right back up. Markets don't really seem to be trading on any particular news, other than the potential for a vaccine to potentially come later on in the year. But much of the news has not been great, and we had quite a bit of that news this week, especially against China. We did see the National People's Congress of China talk about a national security law, which would pretty much take away Hong Kong's autonomy. It sounds like Beijing is becoming increasingly frustrated with the anti-government protests that are going on in Hong Kong, and they want to have some more accountability for those who challenge the government. So this could be a big deal for both the U.S. When we're pushing on sanctions on China, to prevent them from, continuing to, to try and take away Hong Kong's autonomy. But it's also going to be a big deal for some of these Hong Kong stocks. Recently, there was a Senate bill that was introduced over this last week where it was passed unanimously, which is a pretty big deal. And it's going to address investors' concerns over listings in the United States. Most recently, we saw Luckin Coffee become a major issue in the foray as there was some fraud going on in the company where $310 million of sales was fabricated. And the U.S. just wants the ability to audit some of these companies that are listed on our exchange but held over in China. And Chinese companies have been extremely reluctant to grant any routine access to these audit records for American regulators to review. Thus, this creates a lack of accountability for many of these Chinese companies. This Senate bill would potentially require some of these companies to delist from American exchanges. So some of the major companies on the U.S. exchanges include companies like BIDU, Alibaba, JD.com, NetEase, Pinduoduo, Weibo, as well as some state-owned or greater than 30% state-owned companies such as PetroChina and China Petro and Chemical Corp and the China Life Insurance Company. But it's important to know that it still doesn't seem like many of these companies are trading on the news. If we take a look at BIDU, we did see a brief downtick from 120 down to about 107 here, which is a decent move considering, U.S. markets have continued higher. But you would think a delisting or a potential delisting from the U.S. exchange would cause a little bit more downturn than that. Same thing goes across the board with Alibaba. We can see Alibaba's moving, almost back toward the yearly or the most recent high here at 230. We're at 220 here. They released some earnings this morning, so we'll have to watch and see how that goes for the rest of the day today. But still seeing quite a bit of strength in these stocks, despite especially JD.com here. We're seeing a very large move higher with no impact from this particular Senate bill. We'll take a look at a couple more of these before we move on. But NetEase also moving at all-time highs. It looks like. I don't know if we can go back further here. Yep, all-time highs on NetEase. So it'll be interesting to see how this all plays out. Pinduoduo the same. Now, some of these companies like PetroChina, China Petro, and China Life Insurance could be impacted more aggressively as the Senate bill was aimed specifically at some of these companies that are partially owned or greatly owned by the Chinese government, in which case these three stocks here, PetroChina, China Petro, and China Life Insurance, are all more than 30% owned by the Chinese government. So you can see China Petro, but on the downslope here, but that is probably more than likely due to the fact that oil prices are continuing to be have pressure put on them. Same thing with China Petro and Chemical Corp. Now, China Life Insurance is down quite a bit from the high here at 1427 or so. So we may continue to see some further impact here to some of these more state-owned companies. Now, if we go back and take a look at some of the other things that are impacting on this retaliation against China, some of this Open Skies Treaty and this New START Treaty are aimed at both Russia and China. Yesterday, President Trump stated that he was looking to pull out of this Open Skies Treaty. For those of you that don't know what this Open Skies Treaty is, it's basically developed about 30 years ago, and it allowed nations to fly over each country's territory, but you had to have specific equipment sensors on board to assure people that they weren't preparing for military action. Now, this is one of the bigger deals as far as arms control, nuclear arms control for the world, especially between some of these major nations like China, Russia, and the U.S. And this is all hinged on the fact that Russia has not really allowed the U.S. to fly over certain areas. Now, this could be potentially debated on whether or not this is still a relevant treaty in the first place, as satellite imagery has become increasingly more powerful nowadays by comparison to 30 years ago, where we had to rely on flyovers. But now that satellite imagery is so much better, this treaty may not be a big deal. Now, the only thing that it could potentially skew things for is commercial airliners. Now, if they have to change flight paths or anything like that, but you would think that we're not going to close down the airspace over a whole country. They may have certain areas that are restricted, but this is all potentially a problem for this New START treaty that President Obama brought in back in his term, which was an effort to limit the amount of nuclear arms that each country should be able to hold, and that amount was 1,550 missiles. Now, if Trump were to pull out of that New START treaty, which is what many analysts are starting to look at, that could be rather problematic, because that could create a whole nuclear arms race. So we don't want to see that happen. But maybe we can renegotiate this deal to make it better for everyone. Moving on to the Federal Reserve, they've been very wishy-washy as far as their plans going forward, and I think everything's pretty much data dependent. Negative interest rates, every single Fed member that's come out has been against negative interest rates. So it's doubtful that we'll see that, but it still remains a possibility. I don't think they're ruling it out completely, but I think they're going to see how the economy continues to uptick, see once these states open back up if unemployment continues to come back in, or if we're going to continue to see some of these initial claims continue to be on the rise. Now, moving on to some of these coronavirus cases, let's take a look at some of the states and countries around the globe here. As you can see, Russia is starting to slope up here. This is a nice little data package here from Google that kind of shows the slope of each country. You'll see Russia and Brazil all on the upslope here. Obviously, United States, we peaked probably in April and are continuing on the downslope here, despite some of the different states continuing to be on the upswing. So we'll need to watch Russia, Brazil. I think India was also continuing to be on the rise here, despite only a few amount of cases so far. But they just kind of started their path like we did back in February and March. So you'll see Peru, India. We'll take a look at some of those stocks or some of those indices as we move back over to the charting. But let's take a look at some of the states around the United States. Obviously, New York was the highest. They've continued on this downslope here, which is good for that state. New Jersey as well. However, looking at Illinois, still having some issues on the upslope despite having a smaller amount of cases than most people. California still on the rise. Michigan is on the downslope. Texas, as some of these states start to open up, we're going to want to continue to watch this and see how that's impacted some of those state cases going forward. Now, if we take a look at some of the indices here for Russia, you can see they got hit pretty hard on the U.S. cases, but are starting to move back up here on a weekly. I think you're going to see, again, some consolidation. They've filled the gap here between the this low part here all the way up to the high here. But again, I think if we look at the radar, we're going to see quite a bit of volume that's going to make it difficult for these indices to break above. So I would use this 2135, 2150 range as high resistance levels before it's going to break higher. We're going to really need either a vaccine, a therapeutic, or some really positive news, I think, in order to break above these levels. If we take a look at India, we generally use the EPI. They haven't recovered as well, and with as many people as there are in India, I think it's going to be a problem, and the sanitation that's there, I think we're going to see this country struggle a little bit, get its footing back on the ground. EWZ is the Brazil index, also going to have some trouble getting back to normal. As you'll see here, if we were to get above this $26 range, you could see a rapid move higher. So I'd keep that on your eye as far as a break up. And but I think it's going to continue to consolidate within this box here that we have for Brazil, which is basically in this $20 range all the way up to 25. I know it's a wide range, but you can probably play within that sandbox if you feel comfortable, kind of shorting on the high and buying on the dip. But for now, I think we're going to continue in that range until we see some different news, despite some of the fact that markets don't really seem to be trading on much of this news flow. So let's take a look at some of the index levels. I know we looked at the E-mini S&P earlier on, but let's take a look at Nasdaq, which has been rather strong. You can see it's almost made its way back on a weekly chart back to its high that was set earlier on in the year. Obviously this is due to the fact that we've seen a lot of companies move some of their employees to working from home, which has allowed companies like Zoom and Facebook, Google, all the big tech firms to kind of capitalize upon that. Really no resistance above here on a daily chart for the Nasdaq, but I still think it's going to be difficult for them to break above this high level here of 240, despite some of the strength that we're seeing in these tech stocks. But no real levels to be playing with here. So I would, at least on a daily or a weekly, despite the bias being to the long side. Russell 2000 has been extremely weak. And that's mostly due to the fact that, some of these small businesses are really getting hurt. They don't have access to capital as well as some of the large companies do. While they are getting some support from the U.S. government, it's still looking like some of these companies are going to struggle to bring revenue generation back to their company. So again, we're seeing this kind of consolidation here between 118 and 135. I have a feeling the next line of resistance here will be this altimeter range at 141. But may start to see some resistance before we even get to that level. See a couple gaps here that have been filled right here. This one here was filled a while ago. Now this one is trying to get filled, but looks like they're seeing some resistance here. So I'm thinking, while despite the fact that the autopilot seems to be on a long bias, I think we're going to see some consolidation here where the markets may move back down lower. But markets have been irrational lately, and they've moved higher on bad news and bad economics, even though the economics have been from the last quarter and last month. Seems like investors are looking pretty far ahead, 8 to 12 months out, for everything to recover. If we take a look at some of the economic data this week, we did see initial claims come in at 2.43 million. That was versus an expectation of 2.4 million. Continuing claims continue to rise higher at 25 million versus 22.5 million was the expectation, or the previous. We saw existing home sales at 4.33 million, which was slightly better than the expectation of 4.3 million. However, that was a 17.8% drop from the previous month. Now, there's a lot of theories being pushed around in the market with regards to home sales, with people moving away from some of these big cities like New York, Chicago, Los Angeles, moving from the dense populated cities because they're seeing that this virus outbreak could be a potential problem. Some of the recent articles in Bloomberg, we've seen, prices are rising out in the suburbs, and we could see some new homes starting to sell if this theory does reportedly become true. Housing starts earlier in the week were on a pretty extreme decline. They were down 30.2%, which was fairly in line with expectations. Some of the oil inventory data is something that you're going to watch. You're going to want to watch on a weekly basis. USO, many of you remember about 2-3 weeks ago when oil went negative on the front month contract. Now we're starting to see oil move up a little bit, and that's based on the fact that during these weekly EIA inventory datas, we're seeing some massive drawdowns in the amount of barrels produced. This week we saw a large draw of 4.983 million barrels versus expectations of a build of 1.151 million barrels. So that's something you're going to want to pay attention on a weekly basis. This is usually produced on Wednesdays. You'll see it released around 10:30 a.m. Eastern time. But next week, since because of the Memorial Day holiday, it's not going to come out until Thursday at 10:30 a.m. Oil seems to react rather aggressively to this data, as it kind of gives a weekly supply and demand of oil. So we can take a look. If we look at let's look at a shorter time frame here at 60. That's not working. Let's take a look at a 30-minute. There we go. So on a 30-minute, we can see the slope is certainly much higher, and we have some resistance levels established on the USO up to about 2750. If we take a look at the futures, which may be a better indication of what's going on here, we'll see that we have this high level here up in the 3370 range, where we may meet some resistance. However, as I said earlier, this is all going to be hinged on the fact that this is a supply-demand issue. Next week, obviously, we have the holiday on Monday. We have durable goods orders for April expected at negative 15%. We'll get the second estimate for the first quarter of GDP growth. That's expected at negative 4.8%. The previous reading was also negative 4.8%, where we'll see the final GDP number for the first quarter on June 25th, and then we'll start getting into the second quarter estimates, which should not be good. So we're going to be on the watch out for that. We'll also see personal income and spending. Income is expected to drop by 8.3% versus the previous month was down 2%. And then spending is expected to decline by 9.7% versus a draw of 7.5%. So I think a lot of people staying at home, not going out to eat, kind of sticking with the essentials, are not spending like they previously were. So now let's take a look at some of the symbols that you might have. If you guys don't mind, pop a few of them into the system here, and we'll take a look at those for you. We have a couple here already in the chat box, but let's bring our time frame back to a daily here on the right so we can kind of see what's going on. And we'll take a look at one from Nick, I believe. Nick would like to see USAU. This is the U.S. Gold Corp. So gold has kind of been on the rise, I believe. Let's take a look at gold first. Yeah, we see gold on the rise here, but this USAU, I'm assuming U.S. Gold Corp has to do with gold, not really get a lift at all, whereas we're seeing, you know, some of these gold miners on the rise as well. So it's kind of confusing that the USAU is not following suit. So I'd be careful with that one, despite the fact that we're seeing it break up on the daily here away from this consolidation range. We'll see next level of resistance here at around 695 to 7, and then again up here at 750. This one looks like a highly volatile position, so I'd be careful with this one. On the Aileron here, you're seeing some overbought conditions being produced, which is maybe why it's dropped back down. So the natural magnet may be down to this this high volume node down here at $5 before it can move higher. But again, compared to the gold miners, obviously you're seeing a lot more of a push higher on those. KOPN was another one requested. This is Copen Corp. Very nice little breakout here. If you guys were following this on the weekly, this is an excellent breakout that we saw from down below here. This is a penny stock, so I'd be careful with these, considering how much manipulation can go on within these penny stocks. But obviously, you saw the breakout here above this 42-cent level, and now it's moved up to $1.08. So interesting play this one is. All right, what else do we have? FNV from Dean. Also moving up on the toward the all-time highs here. This market has been extremely resilient, hasn't it? But we see that a new high is established on the daily here up at this 105 or 152.70 level. I think there's going to be some support. As you can see, it kind of bounced off that support yesterday at 100. Looks like around the 141 level or so. But if it should break down below this level, out of this consolidation zone here that you see on the daily, we could see a move back to this $130 level, or this previous consolidation zone here that was established about 2 weeks ago. But pretty good trend higher here on this Franco-Nevada Corp. All right, let's take a look at Penn. Oh, I need to clear my drawings. There we go. PENN. This is Penn Gaming International. We're going to see if Vegas is going to reopen. Appears they're going to try, but it's going to be tough with the service industry. They may have to have new machines, which I think I think Penn Gaming is a manufacturer of these machines. I'd have to look that up and confirm, but we're in a zone here on the weekly where we could see a movement higher all the way back up to the highs. But again, this is all on the fact that, you know, some of this the reopening of Nevada could be problematic. We do see some resistance here at the 3070 if you look back at this high volume node here from about 2-3 months ago. So I'd watch that carefully as a potential high point. The market's open now, but I think we have one more stock we'd like to take a look at, which is the Dax Index. I'm not sure if I'm enabled for Dax. Nope, not on this one. I'm sorry, I can't do that one, Edward. We don't have the data for the Dax Index in Germany. Anyway, hope everyone has a good holiday weekend. Stay safe and use some caution when going outside, and hope you all have a wonderful rest of the week.